Hey traders, Fibonacci and harmonics can be applied for spotting very strong reversal zones. In this video I will show you how to apply Fibonacci retracement, Fibonacci extension and harmonic patterns for spotting strong reversal zones. We'll discuss a very nice example. We will go through all of the steps that you need to follow to draw the zones correctly, to apply all these techniques properly. Don't forget to like this video, subscribe to my YouTube channel, and let's start. Alright traders, in order to discuss Fibonacci's and how they applied in a combination with harmonics, we will analyze S&P 500 index. To me right now the index looks very peculiar. To me I see a lot of important things here to consider. So let's analyze the daily time frame here and let me show you what I see right here. First of all, the first thing, the market is trading in a long-term bullish trend. The market is growing like crazy. Yes, that is the fact. And here's our all-time structure high. Reaching that structure high, we see that the market started to fall. Yes, we saw quite strong bearish rally. And what is important about this bearish rally is that the price here violated the last high level to the downside. Moreover, if we draw the trend line, if we take the high levels and draw the trend line based on them, you can see that the market violated that trend line to the downside. We saw the breakout of that, and then after the retest, the price dropped sharply. Yes, so the market looks very bearish to us. And now the question is, does it mean that the market is preparing for a crash? Does it mean that here we may expect a strong bearish trend that is coming? For now, not really. For now, this bearish rally is considered to be the so-called the deeper correction. If previously we saw just the minor pullbacks on the index, if previously we saw just the minor retracements, it looks like this time we can expect like a deeper correction. And expecting a deeper correction, we still are very bullish in the long term, and we still expect a bullish rally on the index. And the point is that for us, being bullish buyers, it is very important to correctly spot the zone, the area from where this next bullish rally will most likely initiate. So here we will apply the harmonics, the Fibs, and with them I will show you a very peculiar zone to watch. Hey traders, if you want to see how I analyze the market live, if you want to see how I spot trading opportunities, how I manage my trades, if you want to ask me questions live, you will definitely enjoy my premium educational group. On live streams with my students, we analyze the market together. We analyze the charts, we analyze forex, we analyze gold, we analyze crypto together. And there we are looking for the trades. And we take the trades together, I show my trading plans, I show my entry level, stop loss, target, and I give the updates for the trade. So we monitor all that together. If you want to learn how to trade, it will be very practical for you. You will see the entire process. Check the link in the description below. It is vasilytrader.com/private group, or text me in one of the social networks. I will give you more details. And never forget to look left at structure. Look at that higher level right here. That higher level is definitely a very strong horizontal structure support. Moreover, looking lower, you can see that it matches with the high right here and kind of with the high right here, though it is a bit higher. So analyzing the structure, we might underline this kind of boiling area. Yes, you can see that in the recent past, the price respected that area is the resistance, and then after the breakout it turned into a very strong support. Yes, and from that we saw a very strong bullish rally. What else we must consider right here? Look, analyzing the price action, here is our very strong bearish impulse from our all-time structure high to that level. Then the price retraced. We saw the retracement right here. After the retracement, the price started to fall, and so far we have a new level low right here on the daily. Here we have a very nice foundation for a harmonic ABCD pattern. And how we draw this pattern? Basically, we take our initial bearish impulse, the so-called A to B leg. We copy and paste that, and we drop it from the completion point of this retracement leg. Yes, so here is our so-called C to D leg, and you can see that projecting the C to D leg, the completion point of the pattern lies perfectly within the zone that we drew based on the historical structure. Yes, so it looks very peculiar. But applying the Fibs, we may notice one more very peculiar thing. And how to apply the Fibs properly? First of all, you must identify the impulses, the impulse lags based on which you will draw the Fib retracement and Fib extension. So here is the first impulse. From that high low to our all-time structure high, yes, we saw a strong bullish lag, and in my view it is a decent bullish impulse. We take a Fib retracement tool, and from its low, from low of the impulse to the high of the impulse, we draw the Fib retracement. Yes, the first thing. Then we also have one more bullish impulse right here. The impulse from that high level, yes, the movement from April, yes, from spring 2021 all the way up to the all-time structure high. It is our strong bullish impulse again. And again, we take the Fib retracement tool, and from its low to its high, we draw the Fib levels again. Yes, this is how we do the things. Lastly, we can add here also the Fib extension. Yes, and we will draw the Fib extension based on the last strong bearish impulse. Here's our last strong bearish impulse, the impulse from the all-time structure high to that low. Yes, so we will take the Fib extension tool, and from its low from its high, to its low, we draw the Fib extension. Yes, this is how we do the things. Now our chart here looks like a complete mess. We have a lot of different Fib levels lying very close to each other. So how we apply that? Here among these levels, what we can spot the so-called confluence zone, the confluence area. So let me show you where it is. Here we applied 2 Fib retracements and 1 Fib extension. And among the Fib retracements, we have the 382, 05, 618, and 786 level. Among the extensions, we have the 1272, 1414, 1618, and 2. And there's just one area right here, one point where the Fib levels of all this retracement and extensions match. Look over here. Yes, based on the completion point of our harmonic ABCD pattern, based on the lower boundary of the structure area that we spotted, we see a very nice confluence. The confluence between the 786, 1272, and 618. Yes. Now what I suggest is doing right here is to execute the so-called chart cleaning. So we will take away all not necessary levels and focus just on the area that we spotted. And now the chart looks much better. You can see that taking away all these Fib levels, here we can focus just on the zone that we spotted. And the last thing that I would do right here, I would also take away that structure. Yes, that structure area. Instead of having that entire area right here, we can just concentrate on its lower boundary. Its lower boundary matches with the confluence zone that we spotted, so we can simply take that away from here. So that is our very narrow structure that we spotted. From that structure, we will expect a bullish movement. Yes, we will expect, first of all, the pullback. Yes, first just a full pullback, first just a minor bounce from that, but potentially the next strong bullish wave may initiate from here. And of course, I wouldn't recommend just blindly buying from that zone. What I would do instead, I would look for the confirmation right here. Yes, once the price approaches this narrow zone, here you can look for the confirmation. By the confirmation, we mean the reversal pattern being formed on lower time frames, preferably on 4-hour or 1 hour. It can be the double bottom, it can be the inverted head and shoulders pattern, it can be the triangle, it can be the wedge, the pattern that confirms the reversal. So you can see that this technique right here helped us to narrow to make the potential reversal zone very narrow. Yes, you can see how perfectly we spotted this narrow area right here, and with a very high probability the price will bounce from that. Apply this technique Apply that on different markets. Watch how it works, and you will be surprised how accurately this confluence areas work. Alright traders, let me know in the comment section if you want to learn more tips and tricks about Fibonacci, if you want to learn more techniques how to apply them in trading. Also, if you want to learn how to trade, don't forget to check my premium educational group, the link in the description below. Please like this video, subscribe to my YouTube channel, and I will see you soon.